Ciao, Antonio. Welcome back to Copytraders Club.
Good to see you, Gavin.
Good to see you. And unlike your first appearance, which was over an hour of audio getting to know you, this is the check-in, which is approximately 20 minutes of chat where we'll start off talking about the state of the market a little, and then we'll move on to some randomly chosen questions. How's that sound?
Perfect. Let's do it.
Not entirely random questions, randomly chosen ones from a list of 40 pre-prepared questions.
And you have a rabbit who pulls them out of the hat, right?
I do indeed. Fluffy is beside me. All right. So, AntonioNobile, eToro darling of 2022, being a PI of the bearish persuasion in 2022, you rose from obscurity to become an elite PI with copiers numbering in the thousands, closing out the year with a whopping positive annual return of about 23%. So it was all going swimmingly, and then the 2023 came along. And while some are sitting on a big fat green year-to-date number, you're in the red so far, some 3% or so down. So while you may have pivoted from bullish to bearish with great effect at one time within the last 18 months or so, a glance at your portfolio shows you continue to be considerably more ursine than bovine. Why have you stuck to your guns this time?
Well, I don't think structurally anything has really changed in terms of the big picture perspectives. There were a few dynamics which caused a squeeze at the start of the year, which can be a combination of people being too bearishly positioned, like myself, liquidity which was entering the market from various different sources and was accretive. So whether that be from liquidity injections from Japan or from China, and even in a big way in the US from the Treasury General account. So that was one. And then I think actually generally, those were a few of the sort of internal dynamics. If we sort of zoom out at the bigger picture, I actually think one of the things which happened was that economic activity, while it's not slowed maybe as drastically or as quickly as people maybe thought it would have done, and including myself actually. And and a large part of that is probably being a lot of government support, which has been going out, particularly in Europe, for cost of living, energy bills, etc., etc. Another one, which from an industrial point of view, quite important, is these tax breaks which they were giving if you like the super bonuses if you bought a new tractor or if you bought a new crane or if you bought it, they'd give you 120% off your taxes you had. So a number of government support schemes and things really just kept things churning along better than one might have thought. And the result, so the flip side of that, however, is that the result of that is that inflation is actually stickier. And so that component of the equation just makes things continuously hard as we go, as we move forwards over the next few months. So it just means that policy is going to remain tight and things I suspect are going to keep on breaking. So while you don't know when it's going to break or where the next penny, the next few will drop, we're in a situation that, we can expect things like that to continue to happen. And I don't think, unless something really, really bad happens, the central banks will be taking the foot off the pedal, as quickly as people might hope, because they simply cannot do that. So that's where we stand. And I suspect at some point this year we'll have some point in the next quarter or so, we'll see equities lower than where they are right now.
Yeah, I saw that you just did an update post minutes before we were due to meet. So I had a quick scan of that.
Yeah.
You talk about things breaking. You think the banking industry wobbles is the sign of the first thing breaking, the first impact of all these rate hikes?
Well, it's hard to, you can hardly say it's the first. I mean, things have been breaking for months in the sense that you just look at the crypto banks. I mean, right? Or even the exchanges, right? They were the most levered, and the most in need of liquidity, and they were the first to go. And so you're slowly moving further down the line, where the pain threshold, that pain threshold is just basically taking out first the easiest ones to take out, and then the harder, slowly it's moving along. Something I was writing about the other day, but it's interesting that they let the crypto banks go. without even batting an eyelid. And the moment, the Silicon Valley Bank did, it was like, okay, we maybe need to do a little bit of something.
Sure. Skullduggery
Which goes
everywhere
to
you
tell
look.
you a lot, it goes to tell you a lot about, the approach the US government is taking towards crypto, I suppose.
Okay, we'll probably talk a little bit more about the markets as we get into these questions, because many of them are investing related, some are eToro related, some are just a bit silly. So shall we get on with some random questions for you, Antonio?
Let's go.
Random question number 1 is 34. 34. Oh, it's an embarrassing one to start off with. What's your favorite flavor of ice cream or dairy-free alternative?
Dark chocolate. So 90% chocolate.
Well, number 33 is the next random question. Which copy or criticism cuts the deepest?
Which copy or criticism? Well, I've got so much of it recently that it's sort of I'm just used to it.
Yeah, you've got a good
These
base
last few
from which
months.
to choose.
Well, some of it is just silly, and you can ignore that. To be honest, I've gone quite. It doesn't really faze me too much. Sometimes what really gets me is sort of the time frame which people are looking at. Where they really get caught up in those last 2 weeks when things are going against you, just before things start to work in a really, really big way. And it's just and that tends to be also the peak of copier frustration or copier anxiety or whatever. And it's just distracting in probably the time when you want to be the most focused, I suppose.
Interesting. You used the word phase there. I hope you spelled it F-A-Z-E in your mind and not P-H-A-S-E. That's very annoying when people write it that way. Okay, next question, number 9. Well, I suppose it follows on maybe from the answer you just gave. Any message you would like to send out to those copying you right now? You just have in the form of your update, I suppose. But
I think it's important to understand when you copy trade somebody that there are different strategies, and that different strategies work better at different times. And there's situations in which the market works better for you, and situations where it's a little trickier. I think the key thing, funny enough, I was having a conversation with a friend about this the other day, and saying our mentality is so skewed from the 2020, 2021 sort of bull market phase where returns were huge and really easy to make. When you sort of expect that to be continue going forwards, and while it doesn't, I'm not necessarily saying you can't achieve those returns in the future. You can. Doesn't mean you're going to be able to do them every year. If you look in history, the people that go down in history as investment managers or hedge funds or whatever have done an average of anywhere between 20 and 30 is considered, on average, yearly is considered to be top notch. And so it's that perception of what you can take from the market effectively, which I think is a little skewed for many people. But you understand, right? A lot of people, a lot of the reason why a lot of people are in the market is because they want to make the difference basically with their savings, which are just not. We live in a world where our generation in general finds it really difficult to save and to make those savings go anywhere, right? Because the value of things is just so astronomically high that almost makes no point in saving. And so that's why the whole Bitcoin thing right from the beginning was there's a real possibility that even with a very small amount of your savings, you can really turn your life around. And that's what a lot of people are trying to do. And it's I think it's important to take a step back and understand that there was a very unique moment in time where a lot of people maybe managed to do that, but then a lot of people probably didn't hold on to those gains. And in general, it's a longer term game than more so than shorter term.
And I suppose, given your results over the last couple of years, very positive results. You will have attracted a lot of copiers who simply expect that to continue. So maybe you've attracted copiers who perhaps don't have such a long-term viewpoint, or maybe that needs to be reinforced.
It's I'm really quite happy with where I am. I mean, and also with my copier base in the sense of which has remained quite stable. So clearly a lot of people do get this. It's a very loud minority which always stand out, right? And I suppose that's like in politics or like in whatever, especially these days we get so much of it on all fronts. But it's a very loud minority which sort of tends to hide actually that 80% of people are quite comfortable with how things are going. And I expect, I expect to have another good year. I think the market is going to offer some good, still offers a very good opportunity. So I expect to have another good positive year.
Number 40. Oh, okay, I'm going to sort of co-opt this question a little bit, because the question is, talk us through one of your most recent trades. And I want to talk about, well, this. While February and March 2023 have not been very kind to those shorting indices, there's one notable exception, the Russell 2000, down over 12.5% from its high at the start of Feb. If I was to short an index today, I would be looking maybe at the Russell 2000. So that's an index of small cap stocks. It's said to have a higher concentration of zombie companies. It includes many small financial companies, is more sensitive to higher rates, and certainly to tighter lending conditions, as mentioned by Jerome Powell recently. And is for many an index which foreshadows drops in other stronger and more higher profile indices. And I note with no small degree of interest that you entered a sell position on RTY as recently as the 23rd of March. Talk us through why. That's a recent trade you did.
Yeah, actually, to be honest, I think I was actually underexposed on the short side to the Russell and overexposed on the short side to tech, funnily enough. I kind of, even though I was short the Russell, I kind of got that a bit wrong. But for all the reasons you say, and ironically, the trade continued, the inverse of last year's trade continues to play out, whereby tech is still sort of recovering and other indices are weaker. Another index which I think I'm focused on is the Dow. I think there's a lot of more cyclical components of the Dow which have not yet, whether the shoe's not yet dropped, and which have still actually been doing quite well and will struggle in the months ahead, probably more so than maybe even on a relative basis, even than tech. So I mean, I think the Russell and Dow probably would be better shorts than Nasdaq and the S&P, but it's relative.
Very good. Next random question, 16. How much time have we got? Time for another 3 questions, let's say. Number 16, have you ever made a fat-fingered error when entering a position on eToro?
Oh yeah, a couple of times. Once it paid off very well. I think it made me like 0.2% on a day. And another time I lost like, I don't know, 0.05 or something like that. The most recent one I remember was a Snapchat short, which I thought I'd enter a short trade, and I entered a huge short. Like there was a couple of zeros above the size of the trade that I had thought on. And actually this is one of the great things about my my copier base, which I think helps me a lot on a lot of occasions, where they're checking the trades that I do, and so they actually spot them.
All right.
And so I had a couple of messages come through, like, did you mean to do that? Or where sometimes you put a buy instead of a sell, or a sell instead of a buy. And they're like, you sure you meant to do that? And
they're on the ball.
Anyway, in the case of the Snapchat one, they are, yeah, I assure you. In the case of the Snapchat one, it turned out to be quite good.
It's good that you admit that. It's easily done. 23.
Oh, it's easily done. Absolutely.
I don't know if this is a good question, but I'll say it anyway. Would you rather, over the next 5 years, have 15% annual growth in your portfolio or 25% annual growth in your assets under copy?
I mean, 20. No, I mean, I'd rather go 15% growth annually, and then the assets in the copy will do what they do, right?
That's the answer, isn't it? It's such an obvious answer. It's not a good question.
Yeah.
Or I suppose you could say if you're growing your assets under copy 25% every year, is that a lot? Probably not in PI terms.
Yes.
Well, I suppose it is. It is if it happened every year.
Well, and then until you reach the limit, because any tour, of course, has the limit now, which they cap the.
You're expecting to get to that?
might take another 12 months or so.
Another 12 months? Okay. 32. Have you ever seen a ghost in your Italian farmhouse from centuries ago?
No ghost.
No ghosts? Surprised me. Okay, maybe this should be the last question. Then number 3. We've kind of had this already. I'll do another one. This question is, does negative copy or feedback ever get you down? Do you want to answer that, or do you think we've dealt with it?
Oh, we've dealt with it basically. I mean, we've talked about that. I can answer it, but we've more or less covered it.
All right, I'll give you a different one then. 31. How would you rate your performance over the last 6 months?
On a 1 to 10 scale, probably 6.5 ish, between 6 and 7. I mean, I don't think I've done terrible. I've struggled with the market over the last 6 months. I must say it's pushed me around a lot. Sort of what I was saying this morning, actually, on my notes copies is, there's not been a clear trend, and I've missed a few things, and I've probably sort of been a bit too obtuse in my bearishness to a degree, and sort of expecting things to waterfall in a way that they haven't, and I've been sort of not flexible enough from that point of view. So yeah, I've had much. I don't think I've done amazingly over the last 6 months. No, definitely not.
Okay, well, that just about does us for the check-in, Antonio. Thank you so much for your time, and best of luck in the rest of the year.
Amazing, Gavin. Thank you very much. Look forward to the next one.